A little ways through college, I was actually studying molecular biology. I saw the movie The Pursuit of Happiness with Will Smith. You know it?
Yeah.
I changed my
One of my
major the
favorites.
next day. I changed my major the next day.
Welcome back, everyone, to Be the Trader. Today, I have a very special guest. It's Merritt Black. Used to be a futures trader with SMB Capital and has decided to start his own prop firm called Apteros Trading. Well, Merritt Black, welcome to the show, my man. And I really appreciate you being here, brother.
Thanks for having me.
Absolutely. And I wanted to ask you right off the bat, where does this name come from?
Yeah, Apteros is kind of a funny name. It's Greek. I think technically the name itself means wingless, like without not having wings. And so kind of the story is there was a statue of the goddess Nike on top of the Acropolis by one of the buildings up there in Greece. And they put that statue there. And as you know, Nike swoosh, it's kind of that's kind of a wing. I don't know if you know that, but Nike, that's what that kind of is for, the swoosh. Like the little shoes that had the wings on them and stuff like that. So anyways, these statues of Nike always had wings. They put this one statue with no wings on it. And so Nike is the goddess of war, victory, things like that. They put no wings on it so that this treasure of having victory and whatnot would always remain in their city, that it couldn't fly away or whatever. And so I liked multiple kind of plays on that in terms of naming Apteros Trading. Because one, we want to stay grounded. We want to be wingless. We want to maintain victory and success, and also stay grounded to certain core principles and beliefs that we have about markets and the way they operate and things like that. So it really fit nicely with a lot of what we have going on.
So let's start right there, though. What are the core beliefs, core principles that you have about markets in general?
Okay, so I am a profile guy. So that means that pretty much everything that I do is grounded in what's called auction market theory. Are you familiar with that?
I'm not.
Okay, so markets are a two-way auction, right? There's people bidding to buy at certain prices and lower, best bid and lower. There's people offering to sell at the best offer and higher, right? So that's not unlike any other market that we might talk about, whether it's art or real estate, or I always like to use a car dealership as an example. And so as buyers and sellers match up and people agree on a price, a transaction takes place, a trade takes place, something comes through on the time and sales or whatnot, right? That's just two people that are agreeing on a particular transaction. So as we collect samples of a transaction happened there for a certain quantity, a transaction happened at this price for this much quantity, and then this price for this much quantity, I look, and auction market theory people look at that information in profile form. On the y-axis, on the vertical axis, where are the distributions of a bunch of trades taking place, and where are there areas where it's very thin, there's no trades taking place. So for example, if you want to look at, I have a Toyota Tacoma, right? I think it's $30-something thousand. If you look at a distribution of the data for that, you got people coming in and they get in kind of the most common price, $35K. Yes, thank you. Yep, we'll do the deal. And you get a big distribution of those. Well, you also get some people who come in and they're very, very shrewd. They haggle the heck out of them. They've bought cars from that dealership for the past 10 years, and they know they're buying 3 more for their kids, and they give them a really good deal, right? Very few people get that deal. So the dealership is not incentivized to go lower, right? They're the seller. Sellers want to get as high of a price as possible. The buyers always want the lowest price possible. So you have very few transactions that occur there. You have also suckers who walk into the dealership. They don't know what the fair price is for the car. They don't care. They just want one. And maybe they get screwed, and maybe they pay way above average for it. These things really happen. And these things happen in markets too. So as you see where value is built, and you're armed with that information of, rather than just looking at some price charts or looking at whatever somebody says on Twitter or whatever some fundamental analyst says about a company or a futures market or whatever, be armed as an auction market theory person, be grounded in where is value for whatever your time frame is. That could be for the year, for today, for the past couple of days, for this week. Know where value is and where is price advertising. Will you buy me? Will you sell me relative to where value is? So
okay,
that's one of the big core tenets of how Apteros trains our traders on the desk, how I handle my own trading, auction market theory, and just really seeing, rather than just, oh, the stock market, it's something else. Oh, the futures market, it's something else. No, it's an auction with humans and machines, just like any other car dealership or anything else.
And you mentioned volume in there. Is that like using the volume profile analysis? Like I've been seeing on some people's charts where they have the volume on the y-axis instead of
absolutely.
Okay,
So volume on the x-axis tells you where something like happened, where there was a big event. But volume on the y-axis tells you over time where volume's building cumulatively.
Yes.
And that's a very, very cool insight, especially when you begin to understand value and how important value is. In fact, little known thing here, there is no edge, there is no serial correlation, to use the statistical term or whatever, between an up day or two up days or whatever leading to, let's say, another up day in a market. It doesn't exist. But there is serial correlation in value migration, how value is migrating from day to day. It actually has the tiniest sliver of predictive characteristics, which price alone does not. Value is something that's very, very powerful.
And you determine value based off of the volume plus the price, right?
Yes. So the technical, and this is probably boring, but value is 70% of the trades around the most traded price.
Okay.
So 70% of the distribution around that most traded price, above and below.
Understand. Well, I know we skipped right into
we got hot and heavy.
The prop firm was about and so forth, but I want to go for the beginning now, Merritt. I want to know what got you into trading to begin with, and where did you start?
Sixth grade.
Oh, really?
Yep. The teacher came in, brought a newspaper. I was born in 1986, so I'm older. In fact, I think we had a chalkboard, not a dry erase board. I'm also from Alabama, so we were a little bit behind. The teacher brought in a newspaper and said, hey, there's this thing called the stock market. We're in sixth grade. I'm like, 12 years old? And let's keep track of how these move, for example. Let's pick a few, like I think we picked 3M and Cisco and, whatever, a couple stocks. And we would write the price fluctuation and the new price every day. And he'd bring the paper in and we'd be like, wow, this thing, I thought at that time, this is the best game on earth to try to figure this out. And I got my parents that evening to drive me, I don't have a license yet or anything, right? Like drive me to the bookstore. I want some books on the stock market. And so I went and got this book, and it was this book called Rolling Stocks by Gregory Witt. And I don't even think that's a very good book. But luckily it was on the technical side of trading, right? I didn't get sucked down all this EBITDA and free cash flows and all this stuff. I got drawn to charts, and I'm just so thankful that I did, because I just love short-term trading and fundamental. The lower and lower your time frame is, the less and less the fundamentals matter. So charts is where it's at. So I got drawn into that. I saved up my money, giving violin lessons and tennis lessons all throughout high school and stuff. Started trading a brokerage account in my dad's name when I was a senior in high school. A little ways through college, I was actually studying molecular biology. I saw the movie The Pursuit of Happiness with Will Smith. You know it?
Yeah.
I changed my major the next day. Put on the only tie that I had, walked across the street from my apartment on Highland Avenue in Birmingham, Alabama, walked into Anderson, Pewitt and Associates and said, hey, I know nothing about this. I want to learn. Could you give me an internship? And they did. And, unpaid, but he would meet with me in the afternoons and teach me about his business as an independent advisor and markets and things like that. I then got an internship with Wells Fargo on their debt capital markets trading floor, FX desk, all kinds of really cool stuff. And, by the time I'm graduating college and whatnot, I'm just like I'm like a pro trader. I mean, I'm just like all in. So that's
nuts,
kind of my
man.
story.
That's so cool though. Like the fact that you had a teacher who brought that to your attention in sixth grade and how they did it.
Yeah.
Is really neat. And
I was talking with my parents about this guy a couple weekends ago. I was visiting them, and I want to reach out to this teacher. I've not hooked up with him, since, I probably saw him a few times like through high school and stuff like that and said hello, but I really want to reach out to them and really, thank them. Yeah, I do.
You should. That puts you on this trajectory. That's amazing. So that's really cool. The other thing is you said you read a book and it focused on technical analysis, which you're so thankful for because there was a lot of other jargon. What do you mean by that? Because some people might hear that and be like,
well, I don't believe that markets are efficient. I don't really believe in trading based on fundamentals. I believe that it can be very, very helpful. Obviously, investing is a different game, right? Investing, fundamentals matter, things like that. But trading, I felt like I was blessed, lucky that I went down that route, which was the true route for me. And so I think it aligned, which I think is important for all traders to align, thinking fast and slow, like your particular skills and weaknesses need to align up. We always talk about trading in niche. You need to find your niche, and it needs to line up with what you're good at. What have you been good at in other areas of life, and how does that, factor in? So that's what I mean by that.
Gotcha. And when it comes to finding your niche, or niche, when it comes to that, what would you suggest people? Because people are going to hear you say that, and this is something that a lot of people tend to not understand. But what do you mean by finding your own niche? Do you mean a strategy? Just pick one. What do you mean?
Okay. We'll start with the basic level that what could be some different avenues for that. I think time frame is a big deal, right? Are you looking at a 1 minute chart and scalping and making very fast decisions and very tight stops? And are you using order flow heavily and things like that? Are you, for example, to go ahead and line that up for someone in life, are you a gamer? Are you really good at Fortnite? Can you crank 90s like no one else's business? You might want to try scalping because you've got the physical dexterity, the speed, the mental connection to be able to make very quick decisions and then deal with the consequences and adapt, right?
Yes.
Other people might be way more analytical, maybe way smarter, a deeper thinker who needs to sit on things, who needs to digest things, who needs to talk aloud about their ideas and let them marinate and sleep on it and really connect dots that other people aren't connecting, and that's going to be, you're going to be way better at being like a swing trader or something and really seeing those kind of things. So I think that's a pretty good analogy for niche and aligning it with yourself.
That was well said. I haven't had anyone explain it in that way. And it fit well with me just because I was a gamer, huge gamer. I'm sure there's a lot of gamers and they're going to be like,
I mean, half the equipment I use is gaming equipment. Yeah.
Right.
It's great.
Yeah. So
these are ninjas. By the way.
Yeah. So that we're gamers. So let me ask you this then. So you start interning, which is great. You start to learn a lot about different parts of the market. What did you immediately, when you discovered futures, was that the first, because you mentioned Forex. I think you said Forex as well.
Forex led to futures. It was stocks at first because what else is there when you're just getting into markets? I know now everyone's like, crypto. But when I was young, it's like the stock market, my family members probably still think I trade the stock market, that's just like the core thing. It was stocks at first. And then that internship that summer in Charlotte led me to, when I sat on the FX desk, that led me to Forex. And then when I decided I want to really go pro with this and really, potentially manage other people's money, things like that, I'm not going to do that in Forex. So it's unregulated, that kind of stuff. So futures has standardized exchanges, clearing houses, security of funds, those kind of things. And they have currency pairs. So I could trade the same stuff I was trading on spot FX So that led me to futures. And then just through happenstance of having the data feeds and whatnot for futures, it's like, oh, let me check out the S&P. Let me check out crude oil and things like that. And then pretty quickly, I fell in love with crude oil in particular. And for years and years, crude oil was almost the exclusive market I traded.
That's interesting. When I don't trade futures. I don't know much about them. But when I hear someone, when I have someone on the show and they've traded them, I have found that they'll stick with one. Like they'll stick with something
that's
really
part of
at,
niche. That brings us back to niche conversation. Your equities people, they tend to chase what's hot.
Yeah.
Yep. Your futures people tend to develop a real deep, intimate working knowledge of the personality of one market and just try to use that to help them exploit it a little bit better. That's not the way everyone has to do it. You could be a specialist in Tesla stock, or you could be a chasing what's hot in the future space, right? Oh, look, soybeans are moving. Oh, look, crude oil is really hot. You could do either or, but to stereotype traders, more stock people, equity people chase what's got elevated R-vol and what's hot. Yep. And most futures traders specialize in one or two names. And that has to do with niche, and it's a better fit for me. I am literally the opposite of ADD. I have a problem, and it's that I get locked in and I can't hear anything else and I can't see anything else. And my wife's trying to talk to me and I'm locked in. If I'm watching a movie, I might as well be on another planet, Yeah. Whereas one of the best traders at, SMB, where I was at before, when they're watching a movie, they're also carrying on a casual conversation and scrolling around on their iPad and texting, because all that movie can't hold their attention because they're just a good multitasker and whatnot. And they like that. So when I was chasing stocks in play, I felt like a chicken running around with his head cut off. I just let me chase this. Oh, wait, I just felt unsettled, unstable. And when I do a deep morning prep on the S&P and crude oil or whatnot, and I'm focused on key opportunities in those markets and I stalk them like a sniper, it just works better for me, and that's not to say it works better for everybody, but it's a very healthy conversation for more traders to hear about niche and finding it. It's a big deal.
Yeah, absolutely. I'm glad you brought that up, and how you felt, like a chicken run with its head cut off. And then now you found what you vibe well with. Yeah. So it just fits for you. And you gave that example of the other trader who is comfortable with that. Cause I know there's people out there who are like you, right? And they like to be zoned in, get engulfed with one specific thing. And they're maybe struggling right now with stocks. Maybe they're like chasing everything and they're like, man, I can't figure this out.
Trading's hard enough. There's no reason to not line up with what you're best suited for. So it's worth spending a lot of time thinking about and figuring out.
Absolutely. And it seemed like for you, was it trial and error? Like, did you kind of like figure out along the way, like stocks, and you went to Forex and you just said, hey, you know what, this is what I vibe well with? Or was it like how did you discover what you kind of worked well for you?
I think maybe it was part random, part luck. Let's face it. When I was first trading stocks, I wasn't any good, right? I was just what's it called? Market tuition. I was just paying market tuition, right? I'm like in high school, in college, got my laptop out, think I know what I'm doing. And, I suck. But I'm learning. That's taking my licks.
That's so awesome though that you were doing it in high school. I was like, holy crap, that's amazing to me. Yeah. You were 96 or 86?
86.
Okay. So we're the same. Okay,
cool. Yeah. So I had an Ameritrade account before it was TD Ameritrade. And I used to think it was the coolest thing. I'd be like, AIRN, and it would give me the quote in real time, like via an automated thing. That's how I was working my little summer jobs or whatever, like getting quotes on my phone. Like, yeah. So, AIRN, I think that's an actual ticker that I traded back in the day. Probably lost money on it. So anyway, so then it's like Forex, and it's like, oh, think about it. I was 20 years old at the time when I was on the FX desk, and I don't think I had any type of foresight or any mature decision about my niche. I think it just felt good. I think I liked saying, let me focus on the euro and the yen, and just like those major pairs, and maybe the Canadian dollar. And to kind of, it just felt good. It felt comfortable to narrow my focus. And so I think it just happened naturally. And from then on out, I was kind of a focused trader.
When did you yourself find consistency in trading? Was it at stocks? Was it at Forex? Was it in futures? Like where,
it was
and then
first
what
with
happened?
first with Forex. Yep.
Okay.
First with Forex, was seeing really good consistency. I'm talking, started to put together 6-8 months in a row, of good, like risk adjusted returns, not just like getting lucky with a trade here or there. And
can you say something about that real quick before you get off that risk adjusted returns? Because someone's going to hear that and be like, what do you mean?
Yeah. So essentially what I mean is, I wonder if I can, no, I can't. Okay. It's all good. I was going to draw on the screen. Doesn't matter. I can do it like this. So you need to, on a base level, you need to come up with, you take a look at, okay, you had a profitable month. Okay. You made 5K. Great. You made 5K. How much did you draw down in order to make that 5K? Okay. Did you draw down? Let's say you were up 2,500 at one point, and then you went to minus 2,500 at one point, and then you ended up plus 5K. So your max drawdown during that time, max peak to trough drawdown, was 5K, and you made 5K. So essentially your ratio of reward to the max risk that you achieve to get that reward is 1-to-1, which is not really what I would call risk adjusted. You made zero on a risk adjusted basis. You know what I mean?
Yes.
So you need to make some multiples before you start patting yourself on the back and thinking that you're really coming up the curve and you're seeing consistency, a healthy consistency. It needs to be risk adjusted. You need to be putting up multiples of your max drawdowns for any given period that you're reviewing performance.
Appreciate you saying that, man. Because I've heard that too, and I was like, I assumed I knew, and I'm glad you just dumbed it down really easy. So I appreciate that.
Awesome.
Let me ask, to get you back on that subject, though. You said you knew you started to get some consistency on futures. You had about 6 or 7 months of consistency.
Forex first. Yep.
Oh, Forex. Sorry, my bad. 6 or 7 months, and then I cut you off and asked you to explain. So can you go ahead?
Yeah, and so from there, it was just kind of a decision. Well, I'm trading the euro and the yen mainly. Let me keep doing that, but in the future space, because that's more professional, there's it more regulated, like if I'm going to really be a pro and, like have a chance at trading prop or things like that, I just felt like futures was a smarter move rather than like a Forex account with 200-to-1 leverage or whatever it was at the time. So just made the transition and really continued. Now, has there been ups and downs? Absolutely. Like I draw down as much as the next guy. So it's the thing that not a lot of people say, because I think everybody's trying to fluff their ego and all kinds of, how the industry is. It's crazy. Once you're a CPT, consistently profitable trader, I don't know how common that term is. It doesn't really, it's not like a light bulb goes off. I've had 150 light bulb moments where it's like, boom, I've arrived. Like you get it, right? Then you get kicked in the teeth or whatever.
Yes.
I've had that time and time again, but there is no one thing where you wake up the next day, because people envision what it feels like to be a CPT, what it must be like to be a CPT. Guess what? It's a grind, just the same way it feels to you right now before you're ever seeing any consistency. It's no different. You're evolving. You're making mistakes. Markets are evolving. You got to stay on top of things. It's a grind. And if you don't love markets, if you don't love the process, it's too difficult to sustain the motivation to persist. You have to have that love for markets, that true love, like I had in the 6th grade of like, I just want nothing more than to figure this out. And that just carrying me through decades, right? It's important. It's really, really important. You do not become a CPT and then it's just a stroll in the park and you're minting money. That doesn't exist. And talk to algorithmic traders either. You don't just come up with an algo and start to mint money and sip pina coladas on the beach wearing this shirt. It doesn't happen. Okay.
Yeah. By the way, he's not in any tropical area right now, too. Just to be clear.
You're going to tell him how much water you spit out earlier when you're like, are you in Bahamas? I was like, I'm in Nashville.
Yeah. Oh, we didn't have the camera recording. So, they'll just have to believe it. I just spit water all over myself.
It was great.
It was great. You mentioned, I love that you said that. You said the fact that just because you become a CPT doesn't mean it's just sunshine and roses the next day and you're just killing it every single day, that you should love this because you're going to have drawdowns just like anyone else has drawdowns.
You're going to hit a point even worse than just drawdowns. You're going to hit multiple points, multiple times where you feel like you can't do anything, that you've lost it all, that you're lost. And the biggest thing that I could recommend to help people when they're when they ultimately will feel that way is to take really, 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 really good notes on exactly how you're starting to be successful. Okay. So take a full screenshot of all your monitors and your layouts, exactly what timeframes you're using. Use a statistical software like TraderView or Journalytics or whatever to monitor what plays are working for you. You should have a playbook. They should have names. You should know how you're making money and what you're doing. Otherwise, you're going to get to that point. You're not going to have anything to fall back on. You don't have and by the way, you need a documented process. Here's how I find opportunity. Here's how I manage risk. Here's how I manage winners. Here's how I place stops. Here's how I choose my bet sizes or whatever. Here's how I review. Here's how I prepare. Document, do all this work outside of trading. Everybody just wants to get in there and click buttons and trade. But if you really want to get good, just like ask Tom Brady, ask anybody. Mm-hmm. It's not what they do on game day that makes them great. It's all the other stuff, right? I was watching the Ravens-Raiders game last night. It was awesome overtime game. And it was Peyton and Eli Manning commentating it. It was on ESPN2. It was awesome.
I bet that's great.
So it was just them commentating it. And they had on, the quarterback played at Oregon. Really nice guy. I can't think of his name. Anyways, he was like in his film room, and they're like, what are you doing after this? So he's like, I got 3 more hours of film to watch or whatever. Like, and he's at the top of the top. So how do you, the theoretical you come into trading against all the best and brightest in the world or whatever, and all the deepest pockets and pro firms and everything and teams, and you don't think that you have to put in Tom Brady or Patrick Mahomes type work outside of trading? Your work outside of trading, reviewing, prepping, working on your mental game, all that is what's going to get you there, not the actual performance.
I love it. You said you be as detailed as possible on what is making you consistent, so that way you have something to fall back on. Yeah. Because there's so many times I'm sure you'll get a DM here and there where they'll say, I've been consistent for like 4 or 5 months and now I can't do anything. Yeah. And then you might ask them, well, what were you, did you track all your trades? And for me, when I ask them that, they'll say, nah, I'm starting to track now that I'm struggling. Exactly. And I'm like, that's tough because now you
missed out on a cycle. You lost that cycle. Yeah. Yeah.
That's tough.
And that's another thing too. If the better notes that you're taking and whatnot, and the better documented your process is and your setups are, the easier you're going to be able to differentiate between inevitably what the problem is. And typically the problem is one of 2 things. Either you are deviating from, you're not dancing with the one that brung you, or the market has changed in some way to where what was working is no longer working. We had a thing in 2020 where I'm big on order flow and using a tool called Cumulative Delta and whatnot to read that order flow. And in crude oil in 2020, it quit working. I mean, one of my mainstays of tools that I use to refine and get that extra incremental edge just disappeared overnight. It just quit behaving the way it had. And think about, from my perspective too, I've got a bunch of students, right? I've got a bunch of people that I've taught, like, here's the good stuff, guys, like, here's how I use it. It works. It's great. And all of a sudden it changes. That felt scary, but it was also something I was mentally prepared for, because I know I've seen it before. Markets can change. Now, this particular thing, it lasted, 6-8 months that way. And then it came back in line. So I don't know what happened. It's back for now. So, but that's the thing that even a CPT has to be prepared for is, and going back to drawdowns and all this kind of stuff, like, and tracking and process, it's either you're the problem or markets have changed. And if you don't know which one, you're like the sucker at the table, at a poker table. You gotta know.
When you said that you had a strategy that was working, that gave you an extra edge, and then all of a sudden just quit working like overnight, I have to ask you that there's no way you recognize, or maybe you did recognize it the next day.
There's a transition period there.
Can you explain that? Because people are probably gonna be like, how does he do that?
Yeah. So no tool is perfect, right? Like, I don't care what you use. I don't care if it's grounded in auction market theory. Okay. Nothing works, 60% of the time it works every time. That's the best you're going to do. Okay. So it's really important that you understand that there's a variability in your, let's say, hit rate, right? How often you're correct. But what you need to track, I teach people to do an XY plot of win percent on one axis, doesn't matter which one, and your risk reward, your average winner divided by your average loser, the absolute value of both on the other. And then there's a curve, which is the point of break even. If you're above and to the right of that curve, you're in profitability territory. If you're below or to the left of that curve, you're losing money. And so what you're going to see if you plot that over, let's say, every 20 trades, you plot, okay, I was 52% wins and 2.1 to 1 win-loss ratio. There's my plot. Plot it during the good periods, during the bad periods, during another good period, during another drawdown. And you get this awesome cluster of the variance of your normal ebbs and flows in performance. Mm-hmm. And now, my friends, when you see something drop to the left or to the bottom out of that little cluster, that's where you know something's really wrong. But again, you have to ask the question, is it my fault? Am I deviating from process? Am I revenge trading or whatever the problem is? Or is it the market's changed? And very, very clearly, we saw a couple days, a couple weeks where the order flow was not behaving normally, because there's always days where the order flow is out of whack and it's like, oh, well, it sucked today, But when you start to see it over and over and over and performance start to suffer from it, that's when I know. Yeah.
Do you gradually start to make adjustments as you start to feel it changing, or you just like make a switch right away?
No, that's the real, like, your past two questions are really, really good questions for people to really get a lot of value out of this talk.
Thank you.
You don't want to make a feeling-based adjustment, because that is dangerous territory, because now you're just as bad as the recency bias amateur trader who's just saying, oh, well, that didn't work on my last 4 trades. Let me find, Fibonacci retracements. Let's try that. No. Okay. So don't just jump ship because you hit a little bad patch. Continue with the prep process before the session, with the thorough review process after the session, and keep saying, okay, order flow let me down here. That's fine. It doesn't always work. Okay, order flow is not working here. That's okay. It doesn't always work. At a certain point, now all of a sudden it starts to become meaningful. You've got enough sample size to where something's off. And so thankfully for me, order flow is the very last thing on the totem pole in terms of my methodology and things like that. It's just that, like I kind of phrased it earlier, that last little incremental edge. I think all the best edges in the world, it's not one thing. You need to have the higher time frame that makes sense. You need to have a certain price action pattern. The order flow needs to support it. All these kind of things that go into making. Exactly. So just because order flow crapped out on us, we didn't stop trading that market. We just stopped using that particular tool. And in fact, if you're good, you'll do what we did, not to pat ourselves on the back, but you'll innovate. We found a new way of looking at it that provided some value, just a different way of using that same tool, totally different than how we used it before. That started to work for that regime, if you will.
Yeah. You just showed a clear example of like, I love what you said. Just because that one part of our process didn't work doesn't mean we just scratch that whole ticker, or in this case, that commodity or whatever it may be, whatever you're focused on.
Yep.
Instead, you kind of just figured out how you can adapt to that situation and still make it work, which is great, because some people might just crumble up and just throw it away. Instead, you guys pivoted and continued to grow. And then when it came back, you went ahead and added it back to the arsenal.
And guess what? Going. That other thing we figured out still works too.
Great. So now you have like extra on your tool belt. And I love,
because we're not afraid to put our egos aside and say, we're screwing this up. It sucks. It's not working. We're not going to sit there and try harder and bet more and lose more. We're going to take our foot off the gas. We're going to go back into the lab, as I call it. Like you've got to be a scientist. You got to be a researcher to be a good trader with any longevity. Because remember, things change, things evolve, just like this example we're talking about here. So we went into the lab, me and my traders, my students, the whole community. We just studied everything we could, and we say, hey, have you studied this? Notice this? This seems to be happening. Yeah, that's interesting. Go down that rabbit hole. Oh no, it's not good enough. Try something else. So, and that, I hate to step on some toes, but if you don't find that type of work fun, trading may not be for you. It's fun to try to study markets and figure out something new, something interesting, a new edge, a new way of doing stuff. You've got to love that part of it. Else you probably never got to CPT status in the first place, Yep.
You got to get that feeling of like, I think I got something here, because that feeling feels so good, especially when you discover and there's so many ways to trade, but when you start to discover what works for you and what you start to recognize over and over, I feel like that's like a real power, a real power, because it's something you recognize. It's something that you start to have more confidence in.
There's a whole lot of psychology that goes into that too, because, look at the turtle traders, right? Like it's very hard to just buy into what someone else says. Hey, this is what works. It's hard to get the true, like down to your core belief behind that. And if you don't have that, you're going to be much more susceptible to getting in your own way mentally and botching up your execution.
And you mentioned two things. Well, first of all, before I bring up those two things, I love that you said it's not just, VWAP or whatever, one little indication. It's like multiple things adding up together to form a trade, which is what we talked about. Oh, I'm sorry. I bring up a lot is confluence. It's not just one thing. It's multiple things to give you a better edge than something else.
Yep.
But you mentioned two things at the beginning of that conversation. You said it's either going to be the market's changing, or it's you're not trading your process properly. I don't know about you, but I have found more times than not, it's the person not trading the process properly.
Oh, for sure. Yeah.
If you've noticed that too, what would you say is there one, or does anything pop out of your head? It's like, it's because of this, that they usually run into this problem because they have this situation in their head, or what it may be?
You'd have to look at all the different kind of trader profiles out there. And so, for example, mine would be risk seeking, get angry, get into a revenge type of mode. Those type things are typically where most of my process errors have come from historically. It's you've got other people on, let's just say on the total opposite end of the spectrum, where I've got a trader on the desk like this. She's more conservative and has trouble pulling the trigger at times, even if it's her best ideas. And so that's the thing. Like when you look at Twitter and you see like this trading, fantastic thing, like this is the truth about trading, or this is what you should do. That works for that person. but it could be the exact wrong advice for someone else. So for example, I'm really risk seeking. This other trader that I have is risk averse. A really healthy affirmation for me when I'm stalking a trade or just getting into a trade is to kind of get myself in this state of, this trade's probably a loser. This trade's probably wrong. What does that do? That disarms me from being attached to that outcome. I understand I'm wrong half the time, or 55% of the time. I'm wrong more than I'm right. So, hey, this one's probably not a winner. Most of them aren't. Relax, take the stop, whatever. That's healthy for me as a mentality. What if I tweeted that and said, this is the mentality all the best traders have? And my trader reads this and they're really gun shy and hesitant, and they start telling themselves, this trade's probably a loser. Are they going to pull that trigger? No, they're not. They're not. So there's not a one size fits all for trading advice. And that's good. That's tough.
It's because it's so unique. Like trading's like a fingerprint. Everyone has their own unique way. And let's just say you and I, for example, might trade the exact same setup. Let's say we both know the exact same pattern, whatever it is, strategy. Even if we traded it every day, we probably could look at it and be like, we traded it completely different. And we can probably both do well, both not do well. One does well, one doesn't. It's just like,
I teach a methodology and I see this day in and day out. It's absolutely.
And you brought up something too. You said you brought up risk adverse. And so now I'm very curious. Do you feel like someone out there is gonna be like, well, that's me. I'm risk adverse. Is trading not for me? Because like I do need to take on risk to be successful. What do you say to those type of people who are questioning that right now? Because there's a lot of people who say that, like, I'm risk adverse, so I don't know.
Yep. Several things. One, they should be aware that from my experience across multiple pro desks and knowing pro traders well, not just, retail buddies that trade in their Robinhood account. Okay. Like this is a different kind of thing here. Unanimously, what I've seen is that what makes the best traders, most of them are risk seeking, and they get involved in a culture at a firm with risk management and teams behind them that can harness that. So they're fearless, but they're able to be in control and not blow themselves up and hurt themselves. So a wake up call if you're really risk averse, that you need to figure out a way to get over that. Now, what would be some advice to getting over that? You have to learn to think about trading differently. What I think people get hung up on when they're risk averse is they think that their analysis, that their setup that's setting up is this make or break moment that's going to validate them in terms of being right or wrong, being a failure. They're connecting it with all kinds of things. Okay. And it could be very psychological. It could be mildly. There's all kinds of spectrum there. But what's really important is to just simply learn how to think about trading differently. And so what's one of the best things you could think of along these lines? Well, you have to know that individual outcomes are random. The distribution of them, right? You might have 3 winners in a row. You might have 3 losers in a row. You might have winner, loser, winner, loser. You might have winner, winner, loser, loser, loser. Winner. There's ultimate, combination of those things.
Trading in the Zone. Go read that.
Exactly. He knows exactly what I'm talking about here. And so the other thing that Mark Douglas would say would be accept that randomness, accept that there's this random distribution of those things. And so now you can think, okay, my job as a trader is to identify where my setups are and manage risk, put the trades on, put risk on where appropriately, in order to find out if the next opportunity is going to work in my favor or not, right?
Yep.
So that line of thinking, trading in the zone, Mark Douglas, it's the answer to a lot of trading psychology problems, including risk-averse people who have trouble pulling the trigger. Another thing that people have trouble pulling the trigger with is actually a technical thing. It's not a psychological thing. They think it's psychological, but they actually, when you ask them, okay, what's your process for, once you've identified a stock you want to trade, you've identified a pattern that you like, you've identified a direction that you want to trade it and where your stop can be, all this stuff. What's your process for pulling the trigger? And they're like, they don't have one. So guess what? Why are you making it so hard on yourself to now go somewhere mentally and start to question things and start to allow that psychology and those fears to drive your behavior and freeze you up?
Yep.
Versus, oh, you want to see? Here's my documentation on my execution process. Once I'm stalking a trade, I look for RSI to be below 20 and it's to start to turn up or whatever. Like, get yourself a set of training wheels. I don't care how good it is. It will be better than you are. And you've proven to be with your hesitation and your psychology. Get yourself a set of training wheels for a while. I teach students to use Heikinashi. Have you ever heard of that?
No.
It's a basic indicator that overlays on top of the bars themselves. It's not like a subpaint indicator.
Okay.
And all it does is change when a bar, let's say you have green and red bars, green up, red down. It changes the formula for coloring them red or green. Instead of a green bar being any bar whose close is one tick higher than its open, right?
Right.
It says, what's the average high-low close of the prior bar? And then what's the average high-low close of this bar or something like that? And what's the difference between those points? And that'll color the bar. So what's that doing? It's just smoothing things out a little bit. It's slowing down perceived shifts in momentum, which is what we use as an ultimate timing tool. I'm a pullback trader. I teach trade. I don't care if you're a breakout trader or not. I teach people to wait for the pullback and then to time it off the momentum shift after a counter trend rotation. So for someone who's hesitating, you've got your setup that's setting up. We've broken out above a key area. A pullback is forming. Okay. Maybe it has a minimum number of bars or a number of time duration or whatever. Wait for the Heikinashi to change color. And that's when, as soon as that bar closes, you pull the trigger. That's a set of training wheels to help somebody consistently. I call it clinical execution. Yeah. I want to see when, like, I teach someone to use those training wheels and then we review and take a look at their fills for the session. I want their executions to be clinical, not early, not late, clinical, just like the training wheels have us set up to do. Yep. And once you do that and you start to build confidence in doing that, you free yourself up, just like any athlete who starts learning the fundamentals of blocking and tackling, who starts learning how to hit a forehand in tennis. You can then free yourself up to play at higher levels, to be more discretionary, to give yourself more freedoms, to be more intuitive, whatever you want to call it, but not at the beginning. Yeah. So check yourself, get those training wheels on, just like learning to ride a bike, and let's get good at that. Let's first do the simple, then do the simple better, then simply be the best at doing the simple.
Yeah, I like that. I like that. And you said one other thing, and that was, I don't win all the time. It's like 50, 55, doesn't matter the percentage. That doesn't matter. But I love that you brought that up, that, I win often. I mean, I lose often too.
Yeah.
And could you highlight how important it is to be a good loser?
Oh,
you know what I'm saying? Because I love that you also said some people put too much on one trade to where they make or break themselves, mentally or and financially in so many ways. But if you got to be a good loser, can you explain? Because that could also help people understand, like, in this industry, to be a professional, the only thing that's not the only thing, but one important thing that's separating another professional from someone else who's bigger is they're just, quote unquote, a better loser over time.
That's 100% accurate. One of the things that I literally tell my students, it's from one of my favorite tennis books, is that in order to win, first you must learn how to lose well. And you can apply that to sports. You can apply that to trading, any type of performance activity. If a golfer, I'm really into golf. So let's say you're about to hit a shot over water and try and land it on the green. Okay. how good are you going to do if your focus is on not losing? If your focus, you can't accept, acceptance is a big word, my friend. You can't accept the potential outcome of hitting it in the water. I promise you're more likely to hit it in the water.
Yeah.
Okay. That's how it works. Every human understands that. Okay. That's how it works. But if you accept that and then you go focus on the things that you can control and your process for executing a good shot or a good trade,
yep,
you're going to put yourself in a much better position. So part of that right there is being a good loser. It's understanding that a certain percent of the time you're just going to hit it in the water. It's going to happen. Accept it, move on, focus on what you can control. Traders in general, amateur traders in general, do a very, very poor job of not focusing on all the external variables that aren't a part of their process. Someone says something on Twitter, or they get scared because of what happened on their last trade, or all these other things that aren't supposed to be a part of your decision-making that become a part of your decision-making, or at least your headspace.
Yep.
It totally screws you up. So you have to, again, it's thinking differently. It's understanding that you're kind of a casino. You're running a casino where people are going to come in and they're going to bet red or black on the roulette table, and they're going to beat you sometimes, and you're going to beat them sometimes. You're going to win sometimes on a trade. You're going to lose sometimes on a trade, just like that. But you've got that little incremental edge, right? Yep. Oh, right. You do have a playbook, right? You have studied and you do understand what your process is for minting edge from a market, right? Oh, you don't? Well, you better start there, right? So once you're there, you just have to think differently about trading and understand, hey, 60% of my trades are going to be losers. So I'm going to get really good at just rolling off my back, and it doesn't bother me at all. Why would it? Does a casino get upset when some drunk guy wins a hand of blackjack at a table? No, they don't care. It's part of their process. Losing is a part of our process as traders. You better be really, really good at it mentally and not let it affect, even if it's your fault. Here's the next level, right? Even if you screwed up, even if you got screwed, like top ticked by the market or whatever,
right?
Those things are going to happen to the best of the best. The difference is the best for them, the next shot is more important than the last mistake. And for you, not you, you're amateurs, you're still hung up on that last mistake, and you can't get it out of your head, and it's going to control everything you do for the rest of the session. And guess what? Your daily loss limit. You're screwed.
Yep. And you mentioned this earlier, which we won't go into now. I want you, everyone who's watching, first off, rewind this and listen to what Merritt just said, because this is just gold. He's been delivering a lot of great value. And he also delivered it earlier. He said recency bias. Go look up what that really means. And he kind of just explained it again in another situation and how it separates the good traders from the bad. So definitely go check that out. But Merritt, look, man, before we wrap this up, I would love for you to share how people can learn more about you. Maybe if they have questions, they want to reach out to you. Could you go ahead and let them know right now?
Sure. Check out our website, apterostrading.com. That's APTEROS, apterostrading.com. Hit me up on Twitter at Merritt Black, MERRITT Black.
Perfect. And look, Merritt, I appreciate you so much for being here, my man. It was such a great pleasure, man. Yeah, same here, man. So take care.
You too, brother.